have to tackle the president, I guess, that way, with this, at least with that trade policy.
Hi, everybody. Welcome back to the Commstock channel. I'm Marlin Bohling with you. I'm joined by David Kruse, the founder of Commstock Investments. And we're going to take a look at, current happenings with the financial realm and all things that affect agricultural markets and the economy and that sort of thing. David, there's a lot going on here this year. I guess one thing that's kind of on the front burner right now, and there's a lot of debate about it. Don't know if we'll ever see the finish line, but that's what they call the big, beautiful bill. What's the last of your take on it, and where do you think this is all going to end up anyway?
Well, I suppose I should start out with a disclaimer, and because I'm going to talk about what's important in this bill to me, and what's important to me might not be as important to someone else, but I think I do have an agricultural perspective. However, when they got into this budget bill debate, I guess the number one thing, and going clear back to the election, was how they handled the estate law. And the way it was is then under the 2017 tax regimen, our current estate tax exclusions were going to expire at the end of this year. And if nothing was done, then they were going to be rolled back significantly. And so that was, and then I also had a lot of concern over what they would do with the stepped up basis on the capital gains. And so one of the primary thing that David Kruse was looking at in this bill was how they handled the estate business. And I guess I'm pleased with the outcome in the initial bill. They increased the exemption to 15 million per person, so 30 million for a husband and wife. They also kept the stepped up basis, and so then that makes this permanent. And so, I'm 72 years old, and so I guess if you were 40 or something, it might not be as important to you as a piece of this, but it was to us. And so I like the way they're handling it at this point, a little bit relieved from that perspective. Other things in the bill generally appeared to be positive for agriculture. They put 56 billion added in funding for the farm bill. When that comes around, that'll be another topic of discussion here. Overall, the bill, I think, disappoints a lot of people. We are nationally on a debt trajectory that's unsustainable. 36 point whatever trillion dollars worth of debt. And this bill doesn't change that. We keep on that trajectory. The way they calculated it, it adds 3.8 trillion. They use a 10-year window is what they do over that time frame. But even that is illusional, I guess is the right word, in that in the current budget that they had when they had the 2017 tax cuts, they only authorized them for a few years. And so they were ready here to expire too, which is one of the things they had to take up in this bill was the extension of those 2017 tax cuts. Well, by doing that, by just going out and authorizing them for a few years, they don't have to score it that way when they get to the entire budget. And it reduces then the impact that these tax cuts and stuff have on the overall. Well, it's only going to increase the debt by 3.8 trillion, which is too much. If they had not done that way, it's closer to 6. And so, but the odds are that 4 or 5 years or whatever the time frame for the sunset is, that they would extend them again, just like they did with the 2017 tax cuts. And so when they say it only increases the deficit or the debt by a few trillion, they are really understating the actual impact, unless at some point in time they're going to let all of these tax cuts sunset, which it would be pretty hard to do. In fact, that was another thing that I supported, was making the 2017 tax cuts permanent. Had they not done so, and we would have reverted back to the old tax laws, it would have had a significant impact in the economy, likely recessionary. That would have been too big of a shock. They had to extend those. Now, as far as it goes anything else, they've added a whole raft of additional tax cuts, something like $1 trillion worth. And that to me was unnecessary. You're not going to get to where you need to be with flattening the trajectory of our increasing debt when you keep adding tax cuts. they were going to offset these tax cuts by finding spending cuts. Well, to do that, they always said they weren't going to go into entitlements, but they did. They went into Medicaid. I guess they're not going to get at Medicare or Social Security yet. But even that only balanced it. It offset it. There's no reduction in this thing in the spending. And I think it was interesting that Elon Musk even made the comment here recently that he was disappointed in the bill, that it really didn't cut things. And, it gets to Elon and his Doge, that was a failure too. I really hope that was going to be successful. I never really believed that they could cut $1 trillion worth of spending in the manner that they were going after to do it, but I was hoping for a little more than the 170 or 175 that they claimed to have gotten. And they've spent that 175 in other ways already. And so we're not getting at the net root of our problem, which is more aligning our revenue with our spending. And so now this bill it doesn't do the overall package what it needs to do as far as changing this future trajectory. And so now the Senate's going to take it up, and we'll see. We'll give them a crack at it and see what they come up with. But overall, there were some good things for agriculture. I got some things in it that I wanted to see, but the overall solution is not there in this bill.
Well, the trade war with China continues. And of course, I guess you have to include a lot of other countries as well. So we're in the middle of that 90-day kind of a cooling off period here with China. Where do we go with that?
It's interesting when you analyze things about, how do you mitigate risk? It seemed like it used to be that when you were looking at which something was going to happen, you could flip a coin. And you could argue then that whichever heads or tails it was going to come up, you mitigated, half the risk. Today, you feel like you're just throwing dice all the time. Well, dice have 6 sides, and they can come up 6 different ways. And so it seems like it's much more difficult to mitigate risk. As far as the trade war goes, we do have one trade deal, and that's with the UK. And so that's what we have to go on. The UK was a little different than other countries in that it has a trade surplus with us, not a trade deficit. One of the things that our president has had to deal with is that bothers him immensely is countries that sell more to us than we buy from them. I guess I don't know that that's always their fault, but he holds it against them. In the case of the UK, they bought more from us than we sell them, and so and that's what you would think is good, and so that's why they got to be first, I think, in who got a trade deal with us. He's going to keep his minimum 10% tariff. I guess then again, I'm going to focus on agriculture. A lot of people seemed elated with that deal, in that we did get a quota for more beef. To sell them some beef. And they took their tariffs off of ethanol, so they'll buy more ethanol. The problem is, really, when we get into UK and the EU, both, is they have an enormous amount of non-tariff trade barriers. Now, these barriers are like GMOs, ractopamine use, cow chlorine washing of our chickens, and they basically bar all of our products for one reason or another. And when this agreement allowed a quota of beef, it didn't remove their non-tariff trade barriers. It just says that as long as you can send us some beef that hasn't been fed ractopamine or these other things, then you can have a quota. But they maintain the non-tariff trade barriers, which I think is a real problem. It doesn't really open the market. What the president seems to think compensates him for that is he's getting a tariff from them for that. But the problem is the tariff money goes to the federal government. And it's the ag producers out here that can't sell to them for all these non-tariff trade barriers, and most things don't have quotas. They don't get any of the benefit from that. And so Donald gets a little compensation from the non-tariff trade barriers in the form of that tariff, but we don't, unless he gives it to us somehow or another. I've got to see how that happens. That hasn't been discussed. And so as we go with the European Union now, and that's the one that's the most heated, They are the worst. They have more non-tariff trade barriers than anybody, and they also, they're in that category that Donald hates too, and that we have the deficit with them. So that's our trade issues there. China's been kind of pushed back. He's got this 50% tariff on them. I really question whether he cares about. He's got his deal, and that's what he said. Actually, I have my deal. As long as I can collect 50% tariffs, I'm happy. You know, and then it comes down to an analysis of what is he really trying to accomplish here. And one of them is that yes, he wants to reassert a different trade orientation with the rest of the world, and it's also the way I described it is his Hail Mary to our budget problem. I just explained, or we talked about in the first segment of this podcast, how the budget current doesn't fix anything. We just keep on keeping on adding trillions to the deficit over the next 10 years. And we can argue over what's good, what's bad, but we're close to 7% of GDP in our deficit every year, and the economists say that to be sustainable, it needs to be down to 3. So we're a long ways from that. Well, Donald has this idea that part of this trade war is to develop a new revenue stream, and that every year the United States is going to get hundreds of billions of dollars in tariff revenue, and that will be the crowning touch that helps our budget situation become sustainable. We'll have a new revenue stream. Now, in my opinion, that's clear theory yet. There is a whole lot of moving parts to this. When you start charging a 50% tariff, you're going to have a lot less imports coming into your country to put a tariff on. Also, you're going to have repercussions from other countries all relative to your trade. Right now, in places like Canada and Sweden and wherever, they're identifying American products so their consumers can choose whether or not to buy from us. And they're unhappy, let's put it this way, with a lot of this trade war stuff. And I think that our exports will suffer as a result of that. And so will these trade deals really open up trade for us? Or are they just a tariff revenue way to make money or bring in a new stream for our budget? It's a lot to unfold here yet as to what this really is about.
Well, one other thing that I really have to wonder about now, with the Congress preoccupied with this big, beautiful bill and all the tariff talk going on and all the geopolitical unrest that we kind of have to stay on top of as well. It seems like the work on the new farm bill is getting lost in the shadows. What do we do about that?
If you listen to the House Ag Committee, they don't think so. They think that they've got the work done now in the budget bill, and they're ready to move on a farm bill. That's what they are now moving their focus to. As I said, that the general budget bill would increase funding by about $56 billion, but that's for the farm programs. But in part, some of the savings is for this budget came from SNAP. SNAP had been making up as much as 81% of the total, farm bill budget. That's going to be declined. I think they cut $295 billion or whatever from SNAP over the 10 years, and so that'll change that. They've actually put together a skeleton, I guess, of a proposal of what to be in the next farm bill. Many of the things that I've heard them discuss sound positive for us. They're talking about an increase in the reference prices. When this is actually what we're working on now is still the 2018 farm bill that's been extended till now it's into 2025. Some of the programs are not funded in the baseline of a farm bill, and those programs, when you extend it, are lost. And they did pick out a few that were important that they were giving baseline funding to in their new proposal. They're also going to tackle that. They said they were going to improve the crop insurance. I think I'm the average Iowa corn or soybean farmer out here or Midwest, not just that state, that they were worried about crop insurance. and they assured that was going to be a strong part of their new bill again going forward. There was some concern about that, because if you go back and you read that Project 2025, in that particular, they made a target of crop insurance in that. And so I was kind of glad to hear that the House Republican Committee wasn't paying any attention to that, and they were listening to the farmers and the farm needs, and that bill said. There's also other things at issue. They were talking about putting a Prop 12 repeal or so in that bill. California, they passed about regulations that they force upon all the other states, and they were going to address that in the farm bill and make it so that you can't have state protectionism, I guess, as what we have today, and that would be a good thing too. So they're making progress on a farm bill, and I most of what I saw at this point was not alarming. What I suppose is alarming is that the coalition that has historically gotten us a farm bill has been disrupted. Really how the rural interests and the urban interests came up with a farm bill is that it was a trade-off. In other words, the urban interests were more concerned about SNAP, food stamps, that part of the farm bill. And of course, the rural interests were concerned about the farm programs themselves. And they would basically, the farm bill's always been a compromise. And of these two urban rural coalitions, I guess. Can that be done again today in the current political environment? That's a question I guess we're going to find out. I don't know that it's that a farm bill is entirely all one party or the other. In other words, if the GOP comes up with a farm bill, are all of the Republican senators going to fall in line and vote for that? There's some of them that don't want it. There's some of them think that's part of what needs to be cut for this bigger budget solution. And so there's going to be a lot of ideas thrown into how this thing is ultimately handled and what the result is. But the question is I think they've got a good start. It looks as though, our current farm bill expires in September. And so that's not very far away. It'd be nice if they need to make some progress. And so I guess here time will tell over the summer. But so far so good, I guess is the way I would put it.
David, I want to call on your experience and expertise here for a second. You and I both were fortunate or unfortunate enough to farm back in the 1980s. That was kind of a dire time to go through farming. And then I wanted to get your thought on how the farm market prices, like the grain prices, held up then versus like what we had back in 2008 and 9 during that big recession. And then now, of course, there's a lot of talk about maybe another recession or even a depression with as much debt as we have, that it's going to upset the apple cart and everything. I just wondered, comparing those tough economic times to today, what kind of impact do you think that would have, for example, on our grain markets for this year, heading into next year, if things would come unglued?
Well, I guess, first of all, my overall view of the current grain markets and such is that they're not very inflationary. There's all this talk about inflation, but it's not base inflation. Prices are not going up in the grocery stores because the farm gate prices are significantly higher, maybe in the case, with the one exception of the beef industry, which is offering off of a different set of fundamentals right now that are pretty unique to that industry. But if you look at everything else, food prices are not high in the stores because of the price of corn or soybeans or wheat or cotton or anything else along those lines. But you asked a comparison, and it's we're not anywhere near the same situation as what we were back in the ag depression. First of all, we're going into this situation in much better financial condition than we did then. We're coming off of a hyperinflationary period where the Federal Reserve was had too loose of a monetary policy for all during the 70s, and that was fueling the inflation. And then Paul Volcker, Fed head in 1980, comes in and completely, I guess, puts on the brakes. Interest rates go soaring. That made the dollar soar, which killed our exports. I go back and I look at it and I wonder how anyone survived back then. It was kind of interesting. I was having lunch, I think Sunday, and I happened to notice that the former FSA county head was there, and he's been retired for a little while. And I kind of walked by him and I said, "Hey, I bet you're kind of glad that you're not there with the USDA now with all the mess that's going on." And he looked at me and he says, "Yeah," but he says, "I was there during the Ag Depression, and believe me, that was no cup of tea," is what he said. And so I guess we all experience our own troubles and tribulations in the dealing with the times that we live in. But today, there's still macro concerns. Everybody worries about what the tariffs are going to do to the equity markets, the stock markets, these other markets. Actually, I think the thing that we have to be focused more on is the bond market and the interest rates. We've now had all these credit agencies start to reduce the creditworthiness of the United States and the U.S. dollar, and maybe the trade war makes other countries less apt to want to invest in this one. We have something like $9 trillion worth of bonds that we have to roll over, I think, later this year. And then we're still, like I said, adding and adding and adding, to our debt. Where's this money come from? It has been, a lot of it has come from around the world. And I think it's going to get tougher and tougher as people get concerned to finance this debt. And so I think that's where our problem is going to come from. Does that mean that I think interest rates to keep the money flow into the Treasury? How are you going to do that with lower interest rates under these circumstances? I don't know that there's going to be there won't be a Fed-inspired thing to significantly increase interest rates. It'll be market-driven is what it will be. It'll be the market that's saying, not the Fed, like it was the last time, that these interest rates have to go higher because you guys need to borrow too much money. And so therefore it's going to cost you more. And so that's what we're watching. If that happens, there's less money coming into the United States, or less willingness for foreigners to bring money in. In the 80s, it meant the dollar soared. We went to 160 on the dollar index. We're below par. We're below 100 today. That 160 was the equivalent of a 60% tariff, in 1985. And so, maybe 10% tariff, we hardly noticed that, as far as the impact on the dollar. But we've seen the dollar weaken, and that actually could potentially be positive for ag commodities. Generally, that helps our exports when our dollar weakens. And so, time will tell. It's an entirely different situation.
Makes you wonder if food commodities might be worth more than the economy by then. Might be something very desirable.
Our margins right now are not good. But we're not by no means is it really comparable to the situation that we endured in the 1980s. And I expect that as we move forward, we're going to have some different outcomes. What has happened to markets since the old, was it Liberation Day? Not too much. Everybody's going to wait and see, period. Some of them are now calling that Trump's trade policy the taco policy, and it's that Trump always chickens out, or is what I guess what that stands for, taco. Every time he's pressed anybody on tariffs, he usually backs off. And so now some of these traders, every time he comes out with something really threatening and the market gets hammered, they buy. And then he backs off his policies and the market recovers. That's been working pretty good for him here for a little while. We have the taco president, I guess, that way, with this release with that trade policy. And so it's interesting to keep up on everything that's happening right now. And it's the only similarity between now and the 80s is that it was a tough thing for agriculture to, we got slam dunked back then, and it's uncomfortable now, But I don't think we can go from that one and make too many assumptions of how this one's going to come out. It'll be different.
Well, David, great to talk with you again. Thank you for all the valuable insight into what's going on. Very interesting stuff. So I look forward to our next conversation too. Hope you have a great week out there. David Kruse, founder of the Commstock Investments. And that'll do it for this episode. Thank you so much for joining us. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time on the Commstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.